Right, lads and ladies, we're back. Now, this one, quick, easy, simple video, is how to find out what type of trader are you. So when it comes to picking what type of trader are you, it's important that you don't try to push trading. A lot of people will be starting this alongside another job. So don't try push trading into your routine where you're just going to be sick of it. Like you're going to, oh, will I have to sit down and do this, or will I have to be looking at everything? Do it when you have the chance to do it. Study it on the weekends. Study it when you have a chance to do it. But don't try force it into anything. And find out what trader you are. Find out when you can trade, and try to stick to that routine, because routine in trading is, I tell you, it will save your life rather than looking at your phone while you're in work. And then when you're in work, sometimes you're losing the trade, and sometimes you're winning. But more times when you're in work, you're going to be losing the trades. But it's easy to find out what sort of trader you are, broken down into 5 categories. You have a scalper. So a scalper is just essentially somebody who takes a good few trades in the same day, and they want to be in and out. Do you know what I mean? They want to be taking advantage of the small movements in the market, 20, 30, 50 pips, and they want to be doing that 5, 6 times a day. Do you know what I mean? Instead of just buying in like a day trader, number 2, they would buy in and they'd let the trade in, and they'd want to be out by the end of the day or following day, possibly a couple of days maybe, but you kind of want to be in and you want to be out of the trade within the day. Whereas a scalper, a day trader might only take 1 or 2, maybe 1 or only 2 good setups a day and hold those setups. A scalper would take more like 5, 6, 7 setups a day, and that's their goal, is to get in and out and take advantage of the price movements in the market, the small price movements. Then you have number 3, the swing trader. All a swing trader is somebody who gets into a position and they'll hold that position for a little bit longer. So instead of doing their analysis on maybe a 4-hour, a 2-hour, or 1-hour chart, they'll be doing it more on a monthly or a weekly or a daily chart. Excuse me. And they'll be looking to hold that position for a longer period of time. So maybe a few days or a week or into a month. Do you know what I mean? Couple months maybe. Swing traders are it's good if you have the money to do it. If you can do it, do it. But it's very what's it? Like not the gratification that you want. You want to be in and out of the trade or not they're winning. With a swing trader, it's I'm buying in and set and forget that account, forget that trade even exists. The analysis is done, the fundamental analysis is done. If it hits, it hits. If it loses, it loses. That's just that. You kind of want to have that strong mentality that you're not going to be every 2 minutes looking at your phone to make sure that you're still in the trade or the trade is going in your direction. Next of all, we have a position trader. Same again, but it's a much longer term. So they want to be holding it for a few months or even a year. These would be the people who are trying to buy in at gold at the very bottom before it takes a rally or whatever the case may be. And the position trader is a long-term position like that. Again, you need to have the mental to be able to just set it and forget it. Have one account for position trade and leave that there. That's fine. That's doing its thing. Don't look at it. Don't stress over it. Like that with any trade, whatever trade you may be, the fundamental analysis is done. And once the technical analysis is done, and once you know what you're looking at and you know your reasons behind why you took the trade, don't think about the trade too much, because overthinking the trade it's not going to change the outcome of the trade. If it's a winner, it's a winner. If it's a loser, it's going to lose. And that's just that. Like that, if any, whatever trade you may be, if any of your positions come in, happy days. And if they don't come in, that's no problem. Look over them. But don't only look over the losers, look over the winners as well. Find out why they won. Find out why this one won and the last one won, but the one before that lost. What's the difference between those trades? You know what I mean? Run over them. Don't only run over your losses, run over your wins as well. And an investor, buy and hold and get out when you're 50. Do you know what I mean? Get out with your investors, kind of like that. Buy and hold. Couple of years you're going to be in the game. But here's run through the I'm going to leave the link below for this course free of charge. Like I said, these videos are just kind of easy if you don't understand. Get a quick rundown of the difference between them all. Fine, buy and hold, and then this chart will sum up everything. Super simple. So like that, it's important to remember, don't force yourself into trading. Don't let it take over what you're currently doing. Use it as a side thing. Use it as a side hustle. Start with your demo. Enjoy it, but don't force it into your routine. Choose which trader you are. It might take a bit of experimenting. Do you know what I mean? You might want to trade and hold positions like a day trader would on the days you're not in work, but you might want to scalp when you are in work, or maybe you don't scalp at all. maybe you don't trade at all when you're in work. Have rules for yourself as well, and when you're trading, and it's important to know what sort of trader you want to be, because if you're a day trader and you want to get in, hold the position for a few hours and then get out, that's different. You're looking at the market different on a different time frame. You're looking at fundamentals differently than you would be if you were trying to get in and out with those trades real quick. Do you know what I mean? That's different types of traders. The next video is currency pairs. No, but we'll go pips first. No, we'll go currency pairs first. Next video is currency pairs. Move on to currency pairs when you're finished. Nice short video. And remember, don't only look over your winners, look over your losers. Oh, sorry, don't only look over your losers, look over your winners as well. Figure out why they won, and use that then to develop your strategy, and eventually be a profitable trader. So with that, we'll get on to the next video now. And the